morning. It's Tuesday, the 17th of January, 2023. And just because it's a business day, it's time to do business here on Business Morning. So we have 55 minutes to have relevant and current business conversations here on Channels Television. You're welcome. I'm Ini John Mekwa. Well, let's get right into it now. We're starting from the global space. Oil prices were mixed on Tuesday after China posted its weakest economic growth in nearly half a century, while its late 2022 U-turn in COVID-19 policies still support hopes of recovery in the country's fuel demand this year. Brent crude futures had risen 16 cents to $84.62 a barrel, recouping some of its 1% loss of the previous session. U.S. West Texas Intermediate crude futures slid 60 cents to $79.26 from Friday's close. There was no settlement yesterday, Monday, and that's because the United States was having a holiday for Martin Luther King. And then data on Tuesday also shows that China's oil refinery output in 2022 had fallen 3.4% from a year earlier, its first annual decline since 2001, while daily December oil throughputs rose to the second highest level of 2022. A rise in the dollar of 7-month lows also put pressure on oil prices, as a stronger greenback makes oil more expensive for those holding other currencies. Still in the global space now, but looking at grains, Chicago soybean futures lost ground on Tuesday, with prices dropping for the first time in 4 sessions as expectations of an all-high Brazilian crop and concerns over economic growth in China weighed on the market. Wheat fell while corn slid from a 2-week high. The most active soybean contracts on the Chicago Board of Trade lost 0.7% to $15 for 3/4 a bushel, and we have a bushel of corn and wheat also falling also in that market. Brazilian soybean growers will harvest a record soy crop just below 153 million tons in 2022-2023 cycle. Many Asian shares slipped after Beijing released weak 4th quarter economic data, although investors expect for a strong China rebound even as they loosen in COVID-19 policy.
Indicating that inflationary pressures are still very prominent. And like I said, the exchange rate pass to reflect commodity prices is on this list. You also have energy costs, diesel prices, PMS prices on a monthly basis, even though officially, you know, the price of petrol has not been officially increased. You see that the black market rate is actually even going as high as 400 naira per liter in some places. I know someone that traveled to the east and still bought, you know, petrol for 400 naira, almost 500 naira per liter in the east. In Lagos here, you find that it's about 200, 250, you know, even from the fuel pumps. Only some big sellers, that,
major
marketers that are, you know, like the NNPC, you know, depots that are selling for about 167 naira. So to tell you that energy prices have also increased, you know, and inflationary pressures are still very much in play.
Yeah, so help us to understand, because in the US, we also saw not as high as expected inflation.
Yeah.
Is it the same thing that is happening there, or are there different scenarios?
Well, I would say there are different scenarios, but when you look at the fact that you first have to disintegrate to understand the stoking factors for each country. So for Nigeria, we find that there are a lot more structural deficiencies or bottlenecks that, you know, push inflationary pressures for Nigeria, from insecurity affecting, you know, the farmers' ability to produce more, go to the farms, to seasonality, to just, you know, poor storage facilities, poor infrastructure. These are endemic, you know, factors that have continuously kept inflation high in Nigeria. Then when you look at the US, you find that inflation in the US is energy induced. And when you look at the fact that oil prices are reduced from what it was at the beginning of 2022, from 100 or even $120 per barrel. Now it's trading at $84 per barrel. You look at the fact that LNG price, even though LNG prices are still high, but they're not as high as they were at the beginning of the year. So when you discount all of those factors and you look at the source of inflation in the U.S. and the fact, and you now coincide that with how aggressive the U.S. Fed has been to tame inflation, you can understand why inflationary pressures are ebbing in the U.S. And for Nigeria, we also see, yes, the CBN also increased interest, so that coincided with the fact that, there was some level of price resistance from consumers during the festive period. You put that together, you see that those are some of the factors that could explain why inflation is actually reducing. But like I said, it's still high when you look at the numbers holistically. I mean, 15%, 21%, 15%, 21%. Food inflation, 24%, 17% as at 2020, 2021. So when you discount all of that, you realize that prices are still higher than what they were a year ago.
So do we see a further decline, or do we see us back to a norm? Because after all, I don't think we've had a soft landing for both energy or food prices. The insecurity issue is still there. Farmers still kind of go to the farm to, produce. And I think this is the planting season also. That will also be a factor.
Yeah, I mean, all of these things are still going to play out. January is typically a slow month at the beginning of the year. So one would expect that even if the inflationary pressures might not be as much, but going into the year, the outlook is that inflation is still going to be very high in Nigeria. The IMF is projecting that, the World Bank is projecting that, analysts are projecting that, and that's because the endemic factors, like I mentioned before, that are affecting Nigeria's ability to produce enough and then reduce inflation substantially are still not addressed. So even if if by chance these issues are also even addressed, let's just assume that happens hypothetically, you also need to consider the fact that Nigeria also has a high level of imported inflation. Imported inflation that today is up to 18%. So meaning that the effect of the Naira, which is one of the most prominent stoking factors for inflation, is still very high. And then you also look at the fact that we import, these consumed energy products, that's PMS, diesel price, and globally, all prices are still, even if they're not as high as what they were last year, they're still high. And the NNPC is still complaining about the fact that they're still paying, fuel subsidies and all of that. So when you discount all of that, you realize that inflation is still going to be very, prominent in the year. And let's not forget, apart from, these other factors that I've mentioned, Nigeria is also experiencing some level of money supply induced inflation. So when we look at, the CBN...
Is that connected to the election?
Exactly. So there's some level of election spending that does filter into that. Then you look at the fact that money supply as well has increased. Money supply is almost 50 trillion naira compared to what it was a year ago. Then you also consider ways and means advances as well that has considerably pushed the money supply factor. So yeah, those are small things that would influence inflation.
So we don't, where do we see commodities prices in the next 1 month or so?
1 month. Well, next 1 month, we could see prices slowly creep up. Right now they are lower because of the harvest season, but we're entering into the planting season really soon, and then prices are going to, begin to creep up a little bit. But then we also cannot discount we also cannot neglect the fact that there's some level of seasonality, that plays out in some of these commodities. So some commodities, this is their planting season, while some this is their harvest season. So we could see some.
And unfortunately, we do not have a strong enough storage and preservation facilities to keep us through the season.
Exactly. Even the strategic food reserves that we have, they've significantly depleted over the past year. Just last year. Yes, last year. Last year, the president actually ordered some release of, some of the food stuff in our strategic food reserve. So that has significantly depleted the bank because there has not been enough supply to, replace what has been taken out.
Well, I guess the good thing is that oil is still above $70, which is the budget for us. So we can still say we're in a safe place, at least for now.
Well, I mean, to an extent. But remember that Nigeria is more sensitive to changes in oil production than prices. But the good thing, though, is that our oil production is slowly creeping up, and that's because of the security measures put in place to, to curb oil theft, and the fact that some of the former pipelines and terminals that were shut, like the Focados, have actually reopened, so oil production is slowly creeping up. So as at this morning, I saw that Nigeria was able to earn as much as about 300, a little over 300 billion naira between October, November, and December from oil exports. So clearly, we're seeing some level of respite in that regard. But according to S&P Global Parts, for Nigeria to fiscally break even, we need oil prices to be as high as $130 per barrel. But that's clearly not happening.
Not even at the peak of it. Did we have up to 130?
Exactly.
But anyway, thank you so much, Jumobi Oluwole. Thank you so much for your time this morning and sharing your thoughts with us.
Thank you.
All right, let's take a breather now. When we come back, are you a billionaire or a millionaire? Are you that 1% of the 1%? We'll find out how you can help poverty in the world. That's after the break here on Business Morning on Channels Television. Welcome back to watching Business Morning here on Channels Television. Now, Oxfam has found that a billionaire gained roughly $1.7 million for every $1 of new global wealth earned by a person in the bottom 90%. So when someone at the bottom 90% is earning $1, the billionaire is earning $1.7 million. And Oxfam also reports that billionaire fortunes are increasing every day, increasing by $2.7 billion. So why is the world still in poverty? Well, let's talk to Oxfam now. We have the country director, Dr. Vincent Ahosi, joining us from our Abuja studio to help us explain this and how we can make the most of these billions and millions of dollars that are flying around the 1% of the 1% globally. Good morning, Dr. Ahosi. Thank you so much for your time this morning.
Good morning, and thank you for having me.
So tell us first, what's the essence of this report? Why go into all of these details, finding out the billionaires and how much they're making and how much the lower cadre is making?
We did this work to be able to know what is happening in the world because we are very concerned about inequality. And the study clearly showed to us that not only are the super rich making so much money on daily basis, on hourly basis, on every minute, but the wealth creation that they are making is also accompanied with an extensive dragging of millions and millions of people into extreme poverty. Take, for example, in the last 2 years of COVID pandemic, as much as 42 trillion US dollars were created in wealth. And out of this, just 1%, the top 1% rich and super rich billionaires, they cornered $26 trillion out of that. The remaining 99% of human beings and individuals around the world were only able to get $16 trillion. And in Nigeria, for the past 2 years of the pandemic, the billionaires have actually increased their wealth by as much as a third. Now, what we have in Nigeria is a case where just 3 rich billionaires are now richer. If you put their wealth together, they are now richer than 83 million Nigerians at the bottom. This is extreme inequality. And out of the 6,355 Nigerians that we have that have as much wealth as $5 million or above, if you put them together, they are 1.4 times richer than 117 million Nigerians. This is extreme wealth. And this is a country where you know that the rich do not pay their fair tax of share. This is a country that only tracks about 12% of available tax available to it. This is a country with a GDP to tax ratio or tax to GDP ratio of just about 3.6%, which is the lowest in the world. The rich and super rich are not being taxed. It is only the poor people that are being taxed by way of one. They are the ones who are now bearing the brunt of the VAT that they are paying on food and services on a daily basis. So we have this myth in the past that when you give tax incentives and tax waivers to the very rich, that they will come back and they will be able to implement social services and social infrastructure that will be beneficial to the bottom 99%. It is not so. We have found out that over the past 40 years, tax cuts, tax waivers, and tax incentives only benefit the rich and the super rich. Pure and simple.
All right, Dr. Ahossi.
They are getting their...
So you also, in your reports, you are proposing that a tax of up to 5% on this group of people will raise $1.7 trillion. And of course, this will go a long way in lifting 2 billion people out of poverty. But how do we get this tax of 5% from them? Is it ever possible to have equity?
It is very easy. One, we need to get to a point where we have the political will. The country cannot continue to go in this trajectory. The rich cannot continue to be richer, dragging millions of people into extreme poverty. Now, what we are trying to say is this. For those who are highly rich, who are super rich, all we need to do is make them, because they earn their income, one, not their incomes are, this is profiteering in a way. They earn their money from assets, from profits from their investments, from profits from their shares and real estate and all that, and investment. Now, these are the same people who contribute, the top 1% contribute as much as double the carbon emission that the bottom 50% are contributing. So they are responsible for climate change more than you and I. An average billionaire, rich billionaire, pollutes the environment as in 1,000,000 times way than me and you on the street. So we are asking them to pay for this. What are we asking them to do? During the COVID-19 pandemic, it became a windfall for the super rich. Now there is energy increase prices, there is food inflation and increase in price of food. Who are the people benefiting? It is the super rich. These are the people who own the shares. They are the owners of the conglomerates of food and energy. So we are asking them to take back to the community. We are saying that if we bring it back to Nigeria, for in case of Nigeria, just the 6,355 Nigerians that we have that have assets over $5 million US. If you put 2% tax on that, and for those who have over $50 million, you just put 3% tax. This is, you can call it solidarity tax, you can call it a one-off windfall tax. Then you now put another 5% on those who have over $1 billion. Nigeria will be making between $3.2 billion to $4.1 billion annually. That is just on annual wealth tax. So if you now go and say, okay, now we want a one-off tax, knowing fully well that this will not affect them, they make their money by, they can sleep in their bedrooms and they continue to make money. And they make it from the public purse, by the way. Because we are the ones paying, the common man on the street is the one paying for all the services, for all the goods. They are the ones who own this money that these rich people are holding today. But they are holding it at the expense of extreme poverty for majority, 99%. And those Nigerians that are just 6,355 who have so much wealth, they constitute just 0.003% of the population. And they have all the wealth. So what we are saying, for example, is if you now increase, let's have inheritance tax. We cannot continue to borrow money and will not have inheritance tax. Let's have property tax. Let's have capital gain tax. These are the things that will affect the rich, not increasing VAT. And when you have this money, you plug it back into social good. Let's have more spending on education. Let's have more spending on health. Let's have more spending on agriculture and social protection. This is the way to go. This is what Oxfam is saying. We have to stop tax waivers for the rich. In Nigeria, you see the Federal Inland Revenue Service giving tax waivers on one side. You see the Nigerian Customs Service giving tax waivers on the other side. These are tax waivers for the rich and the powerful. They call the FRS one, they call it Road Infrastructure Tax Credit, believing that when these conglomerates and rich people come and construct road from point A to point B, that money they used to construct the road, they should take it out of their company income tax. When the president signed that Executive Order 007 in 2019, and we saw this as an innovation that will make these billionaires to bring in more money to construct roads that will be beneficial to the economy and to the people. Nigeria then, the annual budget deficit was just less than 2 trillion naira. But as of today, 2023, our budget deficit stands at over 10 trillion naira.
Actually, 11, Dr.
So what
Vincent.
is the use?
11,
and the roads are not better for it.
Yeah, more than 11 trillion deficit
Yes.
now, 11.04 trillion to be precise. But thank you so much, Oxfam, for that findings. I guess now we have the information, but what remains is, as you say, how do we get the rich and powerful to pay more tax? Whether it's inheritance tax or capital gains tax, you know, to spread the money. We always talk about increasing the tax nets, this time increasing the billionaires' nets, if that's possible at all. But we have to thank you so much for sharing your findings with us, Dr. Vincent Ahos, the country director with Oxfam International. And we'll see how you push this report and we get implementation of it.
Thank you so much for having me.
All right. Well, to be good to be part of that 0.001% of the billionaires. I promise if I get there, I'll pay more tax. I'll give you the inheritance tax and everything. Just let me get there. I don't know about Will, if she'll be able to do that. Will, did you hear that conversation?
Yes.
Just 6,355 people are controlling about more than 90% of Nigeria's wealth.
It's quite saddening to say, because we have over 133 million, you know, in abject poverty.
Don't you wish you were part of that 6,000?
Yeah, Laddie did say we were part of it yesterday.
By faith? Or in reality?
Reality.
I'll remind him when he comes. Okay.
So we saw a bout of profit-taking take place in yesterday's trading activities at the NGX. Down 0.31%. Markets, investors are beginning to take profits as usual. We expected it, analysts expected it. 52,348 going downward, moving towards the 51K level. Now we're still at the 28 trillion naira mark there. Hopefully the market, you know, boosts today. Maybe we have a rebound, kind of like prop up what investors are saying. Maybe not take too much out of the market. We know we're in January and investors probably are looking for money to make one expense or the other, but the market is still on a bullish momentum. We saw top trades yesterday. Volume was 221. It was in the green. It's a sea of green in yesterday's trading activity. Value 3.25 billion naira, and all transacted in 5,219 deals. But Richard Akimolado is going to give us more insights as to what happened in the market. While we're seeing, well, if it's normal to see this profit taken up, if it will persist in the market, seeing inflation numbers came in yesterday. Good morning, Richard. How are you doing?
Good morning, Wills. I'm fine. Are you?
I'm very good, Richard. Richard, we saw inflation numbers coming in yesterday, 21.34%, lower than what we had in the previous month, which was 21.47%. Do you think these sentiments are going to affect investor sentiment in today's trading session? We're seeing investments, yesterday's trading activity down 0.31%. Do you think we're going to see more profit-taking activities in today's session?
Thank you, Wills, for that question. So looking at the inflation figures, I believe this has been priced into the price of listed stocks. So, and if you look at the figures, just a slightly drop in the figure, and that is not going to have a significant impact on today's trading. What we are seeing currently, as we mentioned yesterday, we saw that the market dropped just mildly by 0.3%, and due to profit-taking activities. If you look at what happened last week, we saw significant movement in prices of listed stocks. Week on week, market closed up by 2.5%. So movement in prices of stock like MTN, WAPCO, Zenith, GT. So investors are just trying to book profits on this name. And I believe because we are in the earnings season, and this earnings season comes with final dividend. If you look at the Q3 of most of these listed entities, I think the figures were not too bad. They were decent figures, and I believe that the full year results, we build on that, and we are expecting a good dividend from most of these listed entities.
So how much of this inflation, how much, Richard, how much of this inflation has been priced in by these companies already, seeing the high cost of operations, cost of sales for most of these companies? Okay. Richard Akimoladu, thank you so much for your insight. Richard Akimoladu is equity trader, CSL Stockbrokers, for sharing your thoughts with us. We'll look at how the market is going to close today, and we'll watch out for if investors are going to react to the inflation numbers that came out yesterday. Now, we're going to look at top trades yesterday. UBA led that, GTCO, Transcore followed closely behind. Looking at other major stuff we saw yesterday, sectoral performance was mixed. We saw Presco leading the top gainers chart, WAPIC and FTN Cocoa. Looking at the gainers, we saw Chelaram, Prestige Insurance and the livestock. Now, if we flip over to the NESD market, we saw that it was also down. Negative sentiment yesterday, 0.04% at 705 points yesterday, closing at 927. It's still bordering on the billion, not yet in the 1 trillion naira mark that we're used to. So if we look at the volume yesterday traded, we saw 2.71 million, 2.54 million in value, and in 10 deals, stocks traded in yesterday's trading session. Flip over to the fixed income market to see what happened there yesterday. We're still seeing some mixed reactions in the bond market, which is muted in terms of the trading activities. We saw little or no deals, transactions happening for the 2037 paper, 2025 paper, also little low, 2026, 2042, not so much going on there with no, or if it's sell pressure going on or buying interest in the fixed income space, but Ajibola Aerofilis is the head FX trading at FBN Merchant Quest. FBN Quest Merchant Bank is going to give us more insights as to what's happening there. Good morning, Ajibola. It's good to have you on the program.
Hi, Wills. Good morning. How are you doing?
Yes, Ajibola, we're just going to look at activities that happened in yesterday's trading session. We know that the inflation numbers came probably after the market had closed. We want to know if investors are reacting to that and how much of it is going to affect sentiments going on in a week.
There's a bit of reaction, but it's a bit muted. I think the biggest thing influencing the market now is the calendar, the bond option calendar that was released yesterday evening after close of market, which just kind of gives a sense of what the federal government is looking in terms of borrowing. So that has had a larger impact on the market than really the inflation number. Yes, the inflation numbers have helped, but then we've seen that uptick in yields, and that's just basically because we've seen that the debt plan, the borrowing plan from the federal government is slightly, as you're all aware, slightly, above what it was the last quarter. So that has had a big influence on the market. We've seen that yields have inched up across the curve significantly.
So do you expect investors to carry on maybe in the secondary market? What do you expect? How do you expect that to close today? Ajibola, we're just wondering.
Okay, so we expect that there will be between a 75 to 100 basis point increase in yields across curve. If you look at the calendar, last quarter, federal government was looking to borrow about 225, broken down into 75 billion on 3 maturities. This calendar, we've seen that they're looking to borrow between 80 to 100 billion across 4 different maturities, with a caveat that there might be an oversubscription or even the FGN taking more debt just to be able to plan ahead and reduce their borrowing cost in the first quarter. So we see that sentiment has seeped into the market, and the market is all aware because we have a huge deficit that they're going to cover, and then the market has just priced that in right now.
So the Q3 calendar is already, the Q1 calendar is out. Do you think investors does it give a clear direction as to how much the government is going to be borrowing from the domestic markets?
Yeah, certainly. I think before now we weren't sure across what maturities it is they were going to be borrowing. Before now, it used to be just 3 maturities. Now they've added 2049s for this next quarter. For this quarter, just shows a sign of where the federal government is borrowing. They want to borrow between 80 to 100 billion across 4 maturities, with a chance that they might take on more debt. So we see them borrowing, at each auction between $400 and $450 billion, or $450 billion naira in each auction.
Thank you so much, Ajibola Aero Phillips, Head FX Trading, FBN Quest Merchant Bank, for sharing your insights in the program. We'll look out for how the market's going to close today. If we see more buy interest and yields probably trending lower. Thank you so much. So that's how the market is, played out yesterday. We'll look out for the close for today. So I hope it's not going to be in the red, because you're wearing a red shirt.
It's not an indication.
It's not an indication. Okay.
All right, well, thank you so much. Well, let's head to London now, where Juliana is standing by. Not very good there, Juliana. Good morning. More strikes, more threats from the health sector to the education. I don't know how the UK will get out of this.
Yeah, that's a really good point. Good morning, Innie. Things are pretty bad at the moment, and the winter of discontent, which we were all talking about in the final quarter of 2022, definitely came about. We hadn't seen it since the late 1970s, and it continues into the new year. Strikes is the main topic of conversation, and it is going to last that way, certainly for the next couple of months. We've just had some statements from Gillian Keegan, who is the Education Secretary, and she's been talking about this new round of strikes, which was announced by one of the biggest teaching unions in the UK yesterday. Teachers in England and Wales will be striking on 7 days next month, which does mean, unfortunately, some children are going to be working from home. And we know that working from home during the pandemic took away at least 18 months worth of education for children in the UK. Some children are never going to be able to get that time up. So it is sending shivers down the spines of parents. But this is all about, again, pay, jobs and conditions. Not getting paid enough, not satisfied with job transitions and the conditions of the role, particularly when you're talking about NHS staff and rail staff. So I believe there are going to be discussions between education, the Education Ministry and education union bosses on Wednesday and Thursday, so perhaps those strikes next month can be averted. Unfortunately, the same cannot be said about the Royal College of Nursing strikes, which again will happen tomorrow and Thursday. Again, pay, jobs and conditions, although they're adding patient safety to their list of issues that they're currently having with the government. Now, Rishi Sunak, he has got a lot to deal with, but I think now people are saying it's about time you sat round the table. How long can this go on for? When you were Chancellor, you did say whatever it takes. You said whatever it takes to get us out of the pandemic. So now people are like, come on, Prime Minister, whatever it's going to take to stop these strikes, please do it. Because even though it is annoying people when they are told that, that it's going to take them a couple of hours to get into work or they're going to miss their NHS appointment, most people are on the side of striking workers in this country, because if they had, the guts to do it, they probably would do it too. So the fact that you've got people, standing out in the bitter cold, demanding more money, good on them, so say some people. But we'll just have to wait and see how this continues.
Exactly,
but not great at the moment.
I hope it doesn't get to a state where people don't want to be Prime Minister anymore, because it seems to be getting more demanding. Because you also have unemployment to deal with. The unemployment data is out, and it shows that it's higher.
Yeah, we have had some unemployment data. It's at 3.7% for the 3 months to November. Historically, still quite low. Internationally, still quite low. But all you need to do is kind of chip away at those numbers, as you have to do with all data, Innie. And you can see that there is a little bit of an issue in the UK. And one of the issues is, which has been made clear by economists over the past couple of months, is that it seems as if the health and the wealth of the UK is deteriorating, and it's deteriorating at a fast rate. And one of the issues that we are seeing within the labour data released by the Office for National Statistics is the impact of long-term COVID on the workforce. Remember, it's quite a long time ago now, but the UK did have, not just in Europe, but in the world, one of the highest death tolls of COVID-19. Not only did hundreds of thousands of people die, there are hundreds of thousands of people that are still suffering with long-term COVID. They cannot get the help that they need because it's so difficult to get an appointment with the NHS, and that was before they started striking. Now people have been set back for months, and this has an impact on the workforce. So yes, the labour market is particularly acute in terms of issues to the UK, and of course, if you are only one skilled person in a team that can do that role, you're going to ask for more money. So it does also have a knock-on effect on inflation. So many issues in the UK that we have to deal with at the moment. It's not all glitz and glam here, let me tell you that. It's pretty tough, and it's -4 degrees today as well, Innie, on top of all of the other issues that we have.
Unfortunately, so even if you wanted to go out in the cold to strike and carry the placards and ask for more money, you consider the weather first, Juliana. Well, I wish you all the best. I believe you're equipped to handle it, and you guys will get through it. But yesterday, we couldn't have you on Business Incorporated because the Labour Party presidential candidate was at Chatham House. Today, I believe the INEC chair is going to be there. I wonder if we'll have you, or you'll be also pursuing that in the afternoon.
Well, now it's, yes, on your wishes, Innie. I will certainly be heading out of the studio to Chatham House, which is, you know, an institution. It's a symbolic institution of foreign policy, particularly when it comes to Africa. We did have Peter Gregory Obi there yesterday. Channels Television was, of course, covering the activities and the address live. Certainly, I'm sure we'll be making our way down to Chatham House for this all-important speech that will be taking place, I think, 2 p.m. local Nigeria time.
All right, Juliana, thank you so much for that. We'll certainly be looking out for it at 2 p.m. And I know your hands will be full with that. Thank you so much. Yeah. Enjoy your day.
Thank you, Innie.
All right, so now let's move over to the crypto space and welcome one of those 0.0001 billionaires who have been gaining from inflation that the world is suffering.
Wow. We
are paying more for food and energy, and your companies.
Okay. Maybe I'm masking as a 1%. Maybe I'm not really, you know.
Will informed me.
Yeah.
Right
here. I did make claims. Yeah, I made some claims. Yeah.
Oh, okay.
But
thank God you're clearing the air, because you have some people waiting for you at the gate at the end of the show.
Thinking I'm 1%, you know, I'm 90 something, but it's fine. Okay. It's fine. At least we have neutral in the market today.
Ah, that's rare, very rare.
Yeah, nice sentiment going in the market. Let's flip over to the market cap now. Let's see what's happening there. 987. Still trying to get above that 1 trillion mark. Getting some resistance at the 987 point there, down 0.56%. We've seen some sell-offs this morning with Bitcoin and the altcoins. Volume traded, that's down 1.94%. And we see Bitcoin dominance sitting at 41.17%. Let's look at the price of Bitcoin this morning, $21,152. They get below 20K. But, you know, started a rebound, you know, back to that 21K level, sub 0.15% this morning. But we see that resistance at 21,450. That's holding up Bitcoin from, you know, going above that level to 22,000. And we see price of Ethereum at $1,566. That's also aiming for $1,800, according to some speculators out there. It's down 0.15%. And we see it's a mixed sentiment. Top also by market cap, BNB below the $300 mark. Let's bring in Michael Anaji now, financial market analyst. Hello, Michael.
Hello, Eddie. Happy New Year.
Happy New Year, Michael. Great to have you again. And obviously, we still have issues from 2022 still weighing, on this market. We see the SEC in the U.S., going after Gemini. What's the story, and what are we expecting from that?
So this is another SEC case by enforcement. So basically, they sued Gemini for basically providing unregistered securities in the form of their EARN program. Basically, the SEC claimed that this was an investment for contract, that the people who underwrote this contract knew they were selling it in order to market gains. And so at the end of the day, that is the definition of a security. It's an investment contract that you enter into and that you think you're going to have some kind of money that you recoup on it. And the mistake here was they just offered it to anybody, all the way from retail all the way to institutional. And it's not supposed to be done like that. You're supposed to have certain registration requirements. And so basically they just blatantly violated securities laws. Coinbase tried to make an EARN program just like Gemini, but the SEC told them the moment they try that, they're going to get sued by them. And I think now we understand that better idea of what was going on. Most likely that they had a case that was just pending, basically waiting for them to mess up, and then the case was going to be unsealed. And so at the end of the day, I really do think there's going to be an onslaught from the SEC and the three-letter agencies against a lot of these securities and tokens. And so I really do think, pending that action, I really do think Bitcoin sees a lot of strength in whatever rally that we get versus the altcoins. But that's not to say altcoins go away. It depends on whenever the enforcement action comes down the line. If the SEC goes hard on tokens and unregistered securities like investment contracts, you can expect the altcoin market to really take a hit, and Bitcoin do really well. So that's one of those two things to look at for the year. How many exchanges get hit with lawsuits because they're quote unquote, carrying unregistered securities in the name of their EARN program, which is a security in itself with lack of disclosures, and also as well, how many people are selling unregistered securities in the form of these tokens. The Ripple lawsuit, finally, we're going to be getting some feedback from that. Once we see how that goes, if the SEC kills Ripple, we would expect them to come. They can kill every U.S.-based token project, the Aave, Uniswap, you name it. Their headquarters is in the United States. They're one phone call away from telling them to cease and desist their operations. So it's one of those things. We're going to see the Ethereum side of things, the decentralization of Ethereum get tested. But, there's two things to look out for. The SEC has a lot of power in this industry to clean up or to, I
guess that's why, some of these companies go out of the United States to set up, their headquarters. But we'll keep watching. I guess the SEC in the U.S. have their hands full for 2023, talking about regulation. Thank you so much, Michael and Naji, financial market analyst. Thank you.
Glad to be here. Bye now.
All right, so that's how the market played out. See the top 5 gainers there, single-digit gains, 5%. Biggest gainer, Kava, 91 cents this morning. So the market is not looking bad. It's neutral, but
neutral, undecided.
Undecided. We don't know. It's either hot nor cold. This time.
All right, Laddie. Thank you so much. See you at 1:30.
Thank you.
All right, so that's it on the program. But do remember, we are still getting your new Naira experience. It's 14 days left for you to take that old Naira to the bank and get an exchange for the new one. That's what the CBN says. Unfortunately, as at yesterday, we still see deposit banks giving out old notes. But we'll follow up on this and ask you to share your new Naira experience with us on Business Morning at channelstv.com. Business Morning at channelstv.com. Just send us a mail of your new Naira experience. There you have it, Business Morning at channelstv.com. That's it for today. I'm Ini John Meko. I'll see you at 10 p.m. during the stock market report to tell you how the markets closed for today. Hopefully you'd have made some money by then. I'll try to make some too. Bye-bye.